Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live. And I have had a couple people send me messages and they ask me, Greg, you speak a lot during the live stream about the importance of higher lows. And would it be possible to do a video and explain it more in detail and why they're so important to you? So I think that's a good idea because whenever I see a higher low, it adds just one more reason for me to be interested in that particular setup. So what I'm going to go do today is I'm going to go through a few charts. I'm going to show you some examples of higher lows, but more importantly, I'm going to tell you what's going on beneath the surface. You know, a lot of times you see a pattern and you think to yourself, well, I've heard I'm supposed to buy that pattern. But what I want to explain to you about higher lows is really what's going on with the buyers and sellers and why it is setting up a potential entry for you based upon the psychology and of the buyers and the sellers, and also about what's going on with the supply and the demand at the time that this pattern is setting up. So what I'm going to do is I'm going to go through some of these charts here. I'm going to show you. I'm going to turn the camera off because I'm going to be looking away and it seems rude, but I will come back and say goodbye before the video is ending. So I'm going to switch over right now and we'll put Katie and I up there. Okay, so what is a higher low? Well, it's pretty self-explanatory. It is basically a low that is higher than the previous low. So you can see this particular low here, this is Boeing. This particular low is lower than this particular low. And let me tell you a little secret. When you have a lower low, okay, this is lower than this low. When you have a lower low and it starts to turn up, that does not mean that we are at the bottom. More than likely, this just, once you make a lower low, this low is lower than this low, but once you make a lower low, professional traders generally are looking for a bounce, not a move all the way back up, just a bounce. And if I were to have bought here, I would have been targeting a 50 RSI. This line here is the 30, this line here is the 50, this line here is a 70. And when you get down into this 30 RSI range, you're going to be bumping up against a 50 RSI, and that's going to act as some kind of resistance above you. Doesn't mean that it can't ever get through there. It often does. But the tendency is to go from a 30 to a 50 and then come back down. So in this situation, we have made this low is lower than this low. Now, like I said, if I would have bought here, I would have been targeting a 50 because I feel like that is where it's going to find resistance. And you see it's exactly where it found resistance. It went from here right up to the 50 RSI and then came down. Now, if the bar moves up from there, then that becomes a higher low than this one. And when you have a higher low, chances are if it moves up from there, now you can move back up into a sustained uptrend. And let me show you what's going on. And I'll show you the reason why. When we're in a downtrend here and we're making a lower low, that means that the sellers are stronger than the buyers. They are in control, and they're in control because it continues to go down. Now, once you get down to a certain point, maybe where some dip buyers come in, some 30 RSI dip buyers, now the balance has changed. Now buyers are overcoming sellers, right? Sellers are overcoming buyers on the way down to a certain point. Either shorts decided to cover, that adds some buying pressure. Some dip buyers came in, that's adding some buyer pressure. And then they're able to overcome the downward move to start going up. Well, the people that bought down here, right? Just like me, people that buy down here do not think this is the bottom. They think they are just playing for a 3 or 4 or 5 day move back up into this range before it comes back down. So people that bought here, once it starts getting up to this range here, once it starts getting up to the 50 RSI, they're going to be looking to sell their positions because they made a quick profit from here to here. So if people are selling their positions up here, what's that going to do to the price? That's going to put selling pressure on again, right? Buy here, sell if it fails at the 50 RSI. That's going to cause the market to go back down, just like it did here. Now, a lot of times, this may just go back all the way back down and make a lower low and start all over again. We may come down to here, then rally a little bit, and then continue down. But if once it gets up to that 50 RSI, once the people that bought here sold here and it causes it to move down, if the stock is strong enough not to go back down and test that low, but go the opposite way, that's when I like to buy. And the reason I like to buy is the people that bought here sold here. The people that bought here sold here. All of these sellers are now gone here if it's able to move up. And that allows it to move freely because there's a bunch of sellers that are out of the equation. So one more time, sellers are in control, moving down. Buyers here overcome the sellers, push the price up. And the people that bought down here are probably looking for a bounce to get out. So once it does go up to this 50 RSI and stall out, a lot of the people that bought here are going to sell here, and that's what causes it to come back down. And it can continue to go back down, but if it starts to move up, that's a great thing because the people sold it already here, bought here, they sold it already here, and it was still able to go back up. That's when you can get ease free of movement. So I always look for a higher low. I mean, I buy lower lows, but I'm not looking for an extended run. I'm just looking for a 2 or 3 or 4 day move up before it turns back down. So that's why higher lows are so important to me, and I always look for them. And I think if you start looking for higher lows, regardless of the context of the chart, you're going to find that prices can move pretty easily after that higher low breaks out to the upside. So this is an example of Boeing. And as you can see, then it was able to move up, but not after that lower low. It had to move up, go back down, then this day cause it to be a higher low. Just because this is above here doesn't mean it's a higher low. You have to have the next day move up to put that higher low into place. Okay, so that's an example of Boeing. So let's look at an example of Caterpillar. Okay, here we make a low. We have a little bit of a rally right up in here to the 50, but it is not a higher low. It continues down, makes a lower low, right? So sellers are overcoming buyers. Here, for whatever reason, buyers step in and it starts to move the other way and buyers overcome sellers. Now, the people that bought down here, they're going to be looking to sell once we find some resistance at the 50-day moving average, which is here. And again, they bought here, it moved up here, it failed. And why did it fail? Probably because the people that bought here saw it failing, got out. That causes one more burst of selling to the downside. Now, this could have gone down and made another low, but it didn't. It stopped, moved higher, and it was able to move higher after that. And the reason why is the people that bought here sold here. It came back down. There were not enough sellers to drive it back down. All the sellers that you're worried about, they're gone out of the equation. They bought here, they sold here. So it's easier to move up from there. So I hope that makes sense. Okay, so that's Caterpillar. Facebook. Let's see if we can find where I marked Facebook. Again, Here we make a lower low than here and here, right? So here we make a lower low. People buying here are not thinking it's going straight back up to the moon. They're playing for some kind of 50-day moving average kind of situation or a fail of that. So they buy here. You can see right here at the 50 RSI is where it was finding some resistance, right? Failed, then shot up. This is a higher low than this. And from there, it moved up nicely. So there's another good example. So, okay, let's look at Johnson & Johnson. Another example. This low is lower than these lows. The people that bought here are looking for some kind of rally, probably up into here. If it kept on moving straight up, they would not get out. But because it stalled and then it came back down, people that bought here are likely to have been part of the reason why this moved back down. They were just shooting for a profit target from here up into this area. And when it couldn't go higher than that area, see how it moved sideways? They probably threw in the towel. That's what caused the stock to go down. But now this low here is higher, right, than this low. And once you get a higher low that starts to move up, then you can move up easily. So I don't like to buy when I make a low, when the price makes a lower low and then moves up, I'm looking to get out pretty quick, right? I'm looking to maybe make 1%, 2%, get out if it fails at that 50 RSI above it, then wait to see if it will come down and make a lower low again, or if it will attempt to go down, but then go back up. And then I know I have a higher low in place, which is just always a great thing to kind of have under your feet, that higher low. Okay, let's look at Travelers. Okay, here we make a lower low. This is certainly lower than this low. We rally right up to the 50. See the 50 right here? We go from here to here. We rally at the 50. And lo and behold, it fails. And why does it fail? Because probably the people that bought here had 2 or 3 days of profit here. They decided to sell. That puts extra selling pressure on the price. That causes it to move down, but it's not able to move down anymore. And the good thing is the people that bought here, they sold in this range. Now that whole group of sellers, that's a group of sellers that you do not have to contend with anymore. Does that make sense? It's important because if you know there's a whole group of sellers coming in, it's a little scary if you're long. But if they buy here, sell here, they can't push it down any further and it moves up, then you know this entire group of sellers is gone, and that allows it to move up, as you can see, nicely and much more easily because it doesn't have the group of sellers. So now what I'm going to do, so there's a few examples, right? Boeing, Caterpillar, Facebook, Johnson & Johnson, and Travelers. So now I'm going to take a look at a few positions in real time, and we can kind of overlay what we just talked about. Well, this is Google. This is certainly a lower low, right? Now, if we closed above the 50, I would consider getting into this trade just based upon a close back above the 50. But what I do not like is that it's coming from a lower low. Ideally, what I'd really like to see is I'd like to see this move up, then come back down, and then have the strength not to keep going down, but to come back down and then move back above the 50. Because then I have a higher low under my belt. But if I would have bought here, I didn't, but if I were to buy here, I would be targeting a 50 RSI as my target. And if it got up to 50 and it kept going, then I would keep it. But if it got up to 50 and then closed back below, I would get out, and so would a lot of other people, and that would cause that price to most likely move back down again. And it could come down and make a lower low, but if it came down but couldn't go any lower and then was able to move up, then I'm out of the equation, right? I bought my shares, I sold my shares. I'm not a threat anymore as far as selling. So if it does close above the 50, I will, just because it's closing back above the 50. But I definitely would take a half position, not a full position, because I feel like the majority of the time, this is going to come back down below the 50. And then if it moves back above the 50 the second time, that's when I would buy it with a higher low underneath my belt. All right, let's take a look at another one of these. Triple M, so 3M. Maybe this is the bottom short term, but is it going to go right back up? I highly doubt it. What I think is going to happen is we're going to possibly, if this is the low, I don't know if it is, but if we do rally, there's a good chance we could rally up to the 50 RSI, which would probably put it somewhere in here. And if I had bought here, sold here, that's probably going to cause it to sell off a little bit. It might come all the way back down, or it might stop and then buyers get interested again and then move up. Then you have a higher low underneath you. So, regardless of what you're trading, look out for higher lows. Regardless of how you trade, look out for higher lows, because like I just explained, if a higher low takes place and then moves upwards, that whole group of sellers is now gone, and that allows for ease of movement. Let's look at MO. Okay, so is this a higher low? Well, technically it is so far, right? This is a low. This is lower than here. We rallied. Where did we rally from? The 30 to the 50. Surprise, surprise. Once it rejected the 50, that caused some selling pressure. But look what happened here. Now the buyers have overcome the sellers again. So this is a good sign. If I were to buy this, if we broke above the 200-day, I like to buy above the 200-day just as it is, but I really like to buy above the 200-day when I know I have a higher low firmly in place beneath me, right? Here's a lower low, rally, come down, couldn't go down anymore. Now it's moving up. If we go above the 200-day, I certainly have a higher low in place. Technically, I have a higher low in place right here anyway, but I would like to buy above the 200. But if it closes above the 200 and I have this higher low in place, that's great, because the people that bought here, sold here, it caused it to go down. But if it could still move up from there, all of these people that sold here are out of the equation. I don't have to worry about them anymore. Okay, what's our next one? SLV. That is silver. Okay, here's a good example. Lower low, obviously. It rallied. Is it a higher low yet? No, it's not. It's not a higher low. And it looks like it got rejected by the 20-day moving average here. I don't know what the RSI was. It was probably 47 or something like this up here. Does this mean I'm going to go ahead and buy this? No. If it closes above the 200, would I? Maybe, but I don't like it because it's coming from a lower low up to the close. I would rather see this move up, lose buying power, come back down, right? Because the people that bought it here, that's a nice profit. If this stops and moves sideways or stops going up, they're probably going to say, hey, I'm happy with the profit from here to here. I will get out. That will cause selling pressure, might come all the way back down. But if it doesn't, if it can hold and then moves up above the 200 with the higher low in place, that's where I would really be interested, and that's probably where I would take a full position. But you can see, right? Here's a lower low from this low. Did it go to the top? No, it rallied a little bit, failed, made a lower low, rallied, failed, came down. We've made 1, 2, 3 lower lows. This might come down and make another lower low. But if it doesn't, if it's able to come down a little bit and then move higher, get that higher low in place, then I would start looking at this. Okay, what else do we have? We have Square. Same thing. We have now made a lower low. So do I think we're going right back up? I do not. I think we're probably going to come back up to the 50 RSI, somewhere in this range. And if I bought down here and it gets back up here and stalls, that's where I would sell. That as selling pressure, that's going to cause it to come back down, might come back all the way back down. But for some reason, if the selling pressure that starts here stops and then we're able to move back up with that higher low in place, again, people that bought here, sold here, those buyers are out of the equation. So right now we are in a lower low situation. We are not in a higher low situation. Let's see, AT&T. Okay, so this is interesting. Here we made a lower low, right? We rallied. Where did we rally to? Almost exactly the 50-day. The people that bought here, once it got here, started to stall, or they saw it started moving down. They sell. That's what's causing this selling pressure. Now it may come down here and test this, but if it's able to hold here and then move up, especially a close above the 50, I will buy it because I like buying breaks above the 50, using the 50 as my stop or my line in the sand. But I especially like it because it will have a higher low in place. If you would have bought the break above the 50 here, this first one, well, it didn't turn out so well, did it? And I'm telling you, a big reason is because you came from a lower low. Because as soon as it gets up here, I know the people that bought here are going to be looking to sell. Now, these people are the people that sold here. Well, now it's kind of stopped. Doesn't mean it won't continue, but if it does move up from here, now the higher low is locked in place. These buyers that sold here are gone, and it allows for easier movement. So I am definitely going to be watching AT&T this coming week to see if we can get a close above the 50, because that's positive just by itself. And on top of that, we have a higher low underneath us. Okay, what else we have? We have Tesla. Another example. We have certainly made a lower low than here. We're having a rally, right? This moved down. Sellers were in control. They were in control of the buyers. Here, the balance kind of changed. The buyers and the sellers were kind of in an equal standpoint. Here, the buyers overcame the sellers and were able to rally. But if I would have been one of the buyers down here, do I think it's going all right? That's it? That's the bottom? No. I would be looking, see, here's the RSI 46.28. If I had bought in this range and it gets to the 50 RSI and can't get above it or it stalls, I would sell because it's a nice little profit from here to here. It's just a counter trend trade. And if it fails at the 50, people that bought here are going to sell. That's going to cause it to come back down. But if it's strong enough then to find a bid, and then move back up, then we have a higher low in place, and all the people that sold in this range down to here, they're out of the equation. So I know I've said that like 123 times in this video, but it's important. You have to look and see where the groups of buyers are and where the groups of sellers are. And if you're a buyer, do you want a bunch of sellers above you, or would you feel more comfortable if you knew those sellers were gone, they were overcome by new buyers? That's where I would feel more comfortable, right? Okay, UNG. And by the way, today is Sunday, May 5th, just so you can put this into context. But okay, here UNG. Okay, we make a lower low, we rally. Where do we rally to? Almost just to the 50 RSI, right? That 50 RSI is a resistance. People that bought here are, and if it stalls out up in this 50 range, they're going to sell. That's most likely what caused this the last 2 days to go back down. Now, if it can move up from here, that's what I'm looking for, because the people that bought here sold here. That caused it to come down, and now that group of potential sellers are gone. And if it is able to move up, that allows it to move nicely and slowly. Does it mean I buy right here? No, it doesn't mean I buy right here. Don't get confused. It just means that if it is able to go up now, then it will be easier to move up. But for me to interested in to buy this right here, I would probably have to have a break back over the 20-day moving average, or maybe one more bar down with the V1, V2 reversal, but it would still be a higher low than here. So, okay, what's our last one? UNH. All right. So again, we make a lower low. We have a lot of sellers come in here. Now the buyers come in. That allows it to move up. The people that bought here, see how we got right to the 50 RSI just magically. I'm telling you, when you go from the 30 to the 50, you are going to have some resistance there. And the people that bought here, once it got here and failed, they're going to bail. They're going to take their profit because that's a nice profit. That's going to cause selling pressure to come in and have a tendency for the stock to go back down. But if we moved up from here, like we took out this previous high here, or closed back up at 50, then the higher low is in place. And that's what's important. So if we move back above the 50 or above this previous high, I might be interested. But the main takeaway here is people buy here, they sell here. But if it's still strong enough not to go back down and test, but able to move back up, you don't have to worry about the sellers that bought here because they already sold here. So anyway, I hope that makes sense. I'm going to run quickly through my current positions so I can overlay what we talked about on here. Okay, Amgen. I bought this on the 1st of May. Why did I buy it? Well, I bought it because it was a false breakout to the downside. Went down to a new range, moved back up into an old, up into the old range, rejected the third ATR channel. Okay, but do I think this is a bottom and it's moving up to all-time highs? No, I do not. You can see this blue line here. This blue line is my profit target. That is the 50 RSI. So if it moves up to here and then fails, I will sell 100% because I bought it here, right? And there will be a lot of other people that will sell there as well. That will cause it to sell off. It might come all the way back down, but if it does not, right, if it goes from here to here, comes down, but has the strength to hold and then move back up, putting that higher low, cementing that higher low into place, then I would buy again. Even though I bought here, sold here, if I see a higher low form and then break out to the other side, I will be on that train as well. So yeah, I am in Amgen, but I do not think it's going to the moon. I think it's going into this range, and then I'll wait for a higher low to take place and trigger to the upside. Goldman Sachs. Goldman Sachs, I bought this on Friday. I bought this Friday here. And why did I buy it? Well, I bought it because it went over the 100-day moving or the 200-day moving average. But that's not the only reason. Why didn't I buy it when it broke above here the first time? Well, because we had a lower low. See, this is a lower low than this. So the people that bought it here, when it got up here and lost 200, they bailed. They sold. And that's what caused a move back down. But do you see how it stopped going down and now it's gone back up? Now I'm in. I took this on Friday for that reason. I have this higher low locked in place. This is a low, but it's higher than that previous low. And people that bought here, sold here. That's what moved it back down. That's the bad news. But the good news is they're gone now. They were overcome already by new buyers to the upside. So I hope that makes sense. Intel. I did buy Intel on Friday as well. And why did I buy it? Well, we had a close below the 30 RSI and the 100-day moving average, and it closed back above. So that is why I bought it. Do I think it's going to revisit all-time highs? No, I do not. You should probably know by now, where am I looking to exit this trade? Right here at the 50 RSI. Because that's where I feel it is going to find resistance. And there's a lot of other traders that will do the same thing. Now, if it moves up to 50 and continues up, well, then I don't have to sell and it changes the whole dynamic. But if it gets up to the 50, stalls, then moves down, you're most likely going to have a day or two selling after that, because everyone like me is getting out, and it might come back down and test. But again, if it does not come back down and test, if it's strong enough to just go down a couple days and then move back up, then that would put a higher low here to here, and then like it closed back above the 50 would be a good entry point for me. Merck. Okay, this is a really good example. So actually did buy Merck here, sold it here when it lost, but I re-entered here on April 30th. And why did I do that? Because we go from a lower low, right? This is way lower than everything else. And usually my profit target is going to be a 50, right? So why would I buy at the 50? So it's a good question. And the reason why is because it did go from under 30 back to 50. Then do you see how it looked like it was earnings? So that threw a little wrench in there. But earnings came out. It tried to go back down right where it should go down, but immediately reversed back up strongly. And so it kind of negates the whole, instead of taking 2 or 3 or 4 days down, putting in a higher low, and then moving up, it kind of did it in one day. So it went from just a counter rally and a downtrend to more of a counter rally, new information from earnings, and a strong move up. So now it's more of a momentum play. So this was a good example here. Let's see, XLE. I did buy XLE here on Friday, and just another example. Do I think it's going way up here? No, I do not. I think it's probably going up to somewhere in this range if it goes up at all. But again, if it gets up into this range, I will exit my position if it gets up there and fails. If it does what Merck did and gets up here and then boom, goes strong up that way, then I would keep it. But the tendency and the chances are it will get up to here and fail and then come back down and hopefully put in a higher low and then try to go higher. And that's when I would be a buyer. But I would have a different mindset on my trade. Here, I know I'm buying a counter rally. If it comes up, moves back down, puts in a higher low, and then moves up here, then my mindset is not counter rally. Then my mindset is this could be a trend trade. So hope that makes sense. XLV. So I also bought this on Friday. Had a lot of buys on Friday. We went from the lower low. We went up to the 50. If I had bought here, I would be looking to sell here. And I probably would have sold here, actually, because it did kind of stall. But it was able to, it went down one day. It was able to reverse back up. So I consider this a higher low, putting in a higher low from here. And then we moved back above the 200-day as well. So I hope that helps. They're a big part of my trading. They're a big part of deciding, should I take a full position? Should I take a half position? Is this just a counter trend trade? Is this a trend trade? They're one of the most valuable parts of trading to me. So let's turn the let's see, am I back on there? Hey, how's it going? So anyway, I hope that was helpful. If you have any questions, type your comments down below in the description of this video, and I'll be happy to go over it again, or if there's anything specific you're not sure about, let me know. But with anything, if you have any questions about higher lows or anything else, feel free to email me. My email is in the description of this video, or just send a chat message there on YouTube. And I do live trading Monday through Friday during the last hour of the market, and I'd like to invite you all to come. We have a nice group where they're all live. And the format generally is we say hello, we take a look, we run a little legal disclaimer, we take a look at my current positions, where I got in them, why I got in them, how I'm going to manage them in the future. Then we turn to my watch list, and we go through the watch list and we go down through each stock, and I talk about why it's interesting. Does it have a higher low? Does it have something else? And if there is something interesting, then I usually will buy it at the end of the day. And then we do questions and answers after the market closes for about a half hour or so. So I'd like to invite you to come. If you found this video helpful, I would really appreciate if you could give me a thumbs up or share it on social media. Oh, and I should say, I do offer private coaching via Skype. In the evening time, I do one-on-one coaching and mentoring. So if you feel like that would be helpful for you, I know with my other students, it is helpful for them. So if that's of interest to you, again, my email and my hourly rates are in the description. So thanks a lot for tuning in. Hope to see you next week during the last hour of the market, and have a great rest of your weekend. Thanks, everybody.
U.S. Government Required Disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation, and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.